I'm Skylar James. Welcome back to the channel. In short, this video is a simple way to prove that 20 years of market gains are ahead of us, and it's why I'm going extra long on my picks. Not just market gains, outsized market gains. Market gains that break with historical and statistical trends. And I'm not sharing this to tell you that I'm right. I'm actually sharing it to ask you, yes, you, am I wrong? I want to know, am I wrong? Watch this video till the end and tell me. Don't be a spectator, be a participant, and let me know. I've recently shared with you several videos that outline the general advantages millennials have compared to previous generations. And I touched on Cathie Wood saying that millennials could be the driver of a bull market that lasts until 2036. In another video, I said that a Bitcoin ETF is important because it would let more of our neighbors into the crypto space, giving them upside by getting in early. It's not about Bitcoin, it's just that market participation in any sense is good for them, is good for us as a whole. Today, I want to present to you a combination of these thoughts. I've been churning this idea for a few weeks. The thesis is that we are in for 20 years of outsized market gains, 20 years of statistical outperformance in the markets as a whole, in tech, in crypto, almost all asset classes. I even came up with a cheesy anagram to justify it. ATH, all-time high, right? How about ATH? Access to markets, transformative economy, and habits that are changing. Those three things, access, a transforming world, and new habits will lead to continuous all-time highs in the market. Yes, until 2036. Like Cathie and Tom Lee have said, maybe beyond 2036. Hard to know what the world will look like in 2036. So the first letter of ATH, A, is for access, access to the market. This widespread access to markets as we know them in the early 2020s is new. Robinhood, E-Trade, go back in time, you can see how little advances in tech and brokerage policies brought more and more participants to the market. That's more customers. This access is allowing markets to stay higher longer because these participants see the market through a bullish lens. They're here because they want to participate. More people who hold their position through the big downturns, the weaker each downturn will be. Less selling, right? So this access is allowing regular people to participate. And the reason they are here is because they want to buy and hold and see the market as a positive place to park their cash. That's the first reason I think we're headed into an extended bull market. The second reason is the transformative nature of the economy. That sentence sounds like a bunch of fluff, doesn't it? The transformative nature of our economy. Swap out the word transformative for Tesla. It's the Tesla effect and how new tech stocks can skyrocket quickly. It's this idea, the way businesses made money prior to 2020 and how stockholders rewarded those companies through purchasing stock, that's going to change, not only in specific companies who lead, but in what industries and what goods and services are now considered leaders and worthy of owning. And I don't want to sound all Cathie Wood here, but these new technologies are growing exponentially faster than technologies did 50 years ago. This transformative economy, the new Tesla, ignited investor excitement. That's the T in my ATH. It's reason number 2 that the market will only rip higher for decades to come. Okay, reason 3. Habits have changed. You've seen this too, probably, I'm sure. Teenagers are day trading. Early 20-somethings are speaking fluently about stocks and market trends. The market has seen more inflows in the last year than in the last decade combined. The access we just talked about has built strong market habits for young people. They're attached at the hip to their phone. They do everything on it, including banking and investing and shopping. My first cell phone, I played Snake in it in high school cafeteria, okay? Things are different. My parents, my extended family, not big stock owners. In fact, a lot of civil servants working toward public pensions, they didn't know how to look at stocks. The brilliant young people of today are making it a habit to put money in the market. They are seeing results and being positively rewarded mentally for taking on the risk of investing. So they will keep pumping money into the markets, all the markets, crypto, stocks, real estate, whatever, starting at 18, at 21, at 25, way ahead of previous generations. More and more buyers, higher and higher floors each time the market dips. If you've watched this far, I'm guessing your curiosity is piqued. Please hit that like button so we can get this in front of a wider audience. So I'll wrap this all together in my final attempt to persuade you that you can tell me if you agree ATH is new all-time highs, and it's happening because of widespread access to markets through inexpensive, approachable brokerages. The transformative nature of our economy is creating superstar companies seemingly overnight. And people who are a long way from retirement are building habits of investing that will carry the market for decades to come. What do you think? I've got a video coming out of my top ETF picks for 2022. That's going to build on this thesis to capture decades of growth ahead. Really interested in your feedback. Thanks for watching, and I'll see you on the next one.